This is the only trading strategy you need in 2026. Now, there are a lot of strategies out there on the YouTube channel, but I promise you, if you trade with this strategy for this year specifically, you are going to see results. Stop chasing 95% win rate trading strategies. Just follow this consistent trading strategy that I'm about to teach you right now, and I promise you, you are going to have a successful year. And it is super simple, guys. Like, literally, my 95 years old grandma can trade this strategy. All you got to understand are some few basic things, and once you understand those things, everything is going to click. Okay, I'm going to explain each and everything in this video. I'm going to go over through examples, a lot of examples. I'm going to explain the entire strategy for absolutely free. I'm not going to hide anything at all. So without wasting any more time, let's get on with the video, and please hit the subscribe button. Let's hit 200k subscribers by the end of this year. So the strategy is very simple, guys. So you need to understand that every candle, almost like 95% of the candles, have a wick either to the downside or the upside, right? So our goal is to take an entry near the wick level on the lower time frame. Again, every candle has a power of 3. Now, what is a power of 3? Power of 3 is basically accumulation, manipulation, and then distribution phase. Now, this manipulation phase is the wick part of the candle. So we are looking at the 4-hour candle. So for this strategy, we're going to be using the 10 a.m. 4-hour candle. Okay, make sure you know that we are only going to be trading this one secret candle, and this candle can basically print you a lot of money, guys. I'm not even kidding here. This is the like literally the magic candle that no one, not a lot of people know about this. So again, around 95% of the candles have a wick, and you want to capitalize on that wick. Now, the problem is, how do we know when the manipulation phase is over? Because this is accumulation, this is manipulation, and then this is distribution, right? But normally you wouldn't know when the manipulation phase is going to be over, because price can just keep on manipulating to the downside, and then eventually it's going to go up, right? So for this, you do not need any daily bias whatsoever, guys. Literally, all you got to do is mark out the opening price of the 10 a.m. candle. So as soon as the 10 a.m. candle opens, the 4-hour candle, right? You ideally want to look at the 5-minute or the 15-minute time frame first. Okay, so below the opening price of the 10 a.m. candle, you want to mark out bullish PD arrays, now on the 5 or 15-minute time frame. Now, these could be a 5-minute fair value gap or a 15-minute fair value gap, or this could be a 15-minute, like an auto block, right? Or a 5-minute auto block. As long as there is a support level, right? Or it could just be like a fair value gap, you are good to go. Now, this is A+ setup that I'm talking about. I'm going to teach you an A setup that works really well as well. So again, you mark out the opening price, and then mark out the bullish PD arrays below the opening price and bearish PD arrays above the opening price. Now, first of all, again, I'm teaching you the A+ setup. So as soon as the candle opens, you are anticipating that price will tap into the PD array, right? So as soon as price taps into the PD array, right, on the 5 or 15-minute PD array, you want to drop down to 1-minute time frame. Okay, and what I'm teaching you right now, I used this strategy today, and it just hit the TP. So let me just go here, right? And I'm not sure why it's not showing the executions right now, but if I leave the replay mode, you can see that it should show executions. So this is trade await. I entered a long here, and I cashed the power of 3 move to the upside. Okay, so when price taps into the 5 or 15-minute PD array, right, you want to look for, you want to drop down to, first of all, on the 1-minute time frame. And then afterward, the most important part of the strategy, guys, like literally this is the most important part. If you miss on this, if you skip on this, it's not going to work out for you. And that is SMT divergence. So I usually trade NQ with this strategy. You can trade gold futures as well. But what you're looking for is a specific type of behavior where we get SMT divergence coming off from a 5-minute or 15-minute PD array. And ideally, you want to take a long below the opening price of the 10 a.m. candle. When we are below the opening price of the 10 a.m. candle, that means that we are in a discount, and that is a very good area to get in long positions, right? So we tap into the PD array, we get SMT. Now, the next step is that you're looking for change in a state of delivery. So I want the price to close above the continuous bearish candles that swept liquidity, right? So we have this low. It's those continuous like bearish candles swept that low. And we have SMT, meaning that NQ made a lower low, lower high, lower low, but oh my god, how do I fix this? How do I fix this? Okay, let me just do this very quickly. So, all right, perfect. So NQ made a lower low, right? But ES, which is a correlating asset, it failed to create another lower low. So that is your SMT, but we need to confirm the SMT divergence now. And we do that by looking at change in a state of delivery. So if the SMT is intact, right, and we get a change in a state of delivery, right, that is your confirmation. Now price wants to push up, right? So another tool that I use, and this is also very important, is that to further confirm that the manipulation phase is over, right? What I like to do is, first thing first, let's just mark out the opening price. So let's say the candle opened here, right? So this is the opening price of the candle. This open is right here, okay? You need to understand this, okay? So what I'm looking for is the very first market structure shift. So we have a open here, price goes up, higher high, higher low, higher high. Now, you look for a market structure shift. So we have a market structure shift over here. Now we are going to measure the manipulation phase first. So what we do is use our Fibonacci tool over here. We use it from the last high that was formed to the last low that was formed before the market structure shift, right? And again, the manipulation phase ends at -2, -2.5% deviation. We get SMT. We are coming off from a 5-minute or 50-minute PD array. And we look for change in the state of delivery. And the next step is to catch that distribution phase. And this is how it's going to look like. So we're going to get an entry on the retest. And we can target the expansion phase. Now, to measure the expansion phase and to know where you should take your profits is very simple. So again, we use the fib from the last low that was formed to the last high before the market structure shift, right? So right now, it is pointing out this level over here for your TP level. Now, look to the left and see if there's any liquidity pool within this -2 and -2.5. And then you can target that level. So this could be your first TP. And then you can also like hold till -4, because usually when we are in the distribution phase, price will go towards -4. Very simple stuff, guys. I'm going to give you a lot of examples. So even if you don't understand this right now, if you keep watching till the end, by the end of this video, you will leave with a full understanding of this trading strategy that you can use in 2026. Trust me, it is literally the easiest trading strategy that you can use. But let me also teach you the A setup. So this was A plus, where we look for PD arrays. But now I'm going to teach you the A setup. So instead of waiting for price to tap into the PD array, what we can simply do is right after the market open, right, is this is what I like to do sometimes as well, is that after the market open, what I'll do is look for SMT divergence, right? So if we get SMT divergence above the opening price, so this is the open, guys, remember that this is the open. So let me just literally do that so it's easier for you. So this is the open, this right here is here, if that makes sense. Okay, so let me just guys, let me just do this correctly so you guys understand it. Okay, I don't want you guys leaving confused. So let me just remove the PD arrays, right? So this is the open price goes down, and what I'm basically looking for A setup is SMT divergence below the opening price or SMT divergence above the opening price. And if you get change in a state of delivery like this, and we have SMT, now that would indicate in some way that the manipulation phase is over, because SMT is very strong when it comes to 10 AM 4-hour candle power of 3. So if we get SMT, and honestly, if my bias is bullish, even though you don't need bias for this trading strategy, but if your bias is bullish, right, you can take a long right away. You don't need to wait for price to tap into the PD array or measure the manipulation phase with the standard deviation, right? However, what you can do is use this to measure your take profit level, because even though this upward move might be a manipulation phase, you can still catch this manipulation phase and capitalize on that. You don't always need to catch the expansion phase. When using the A setup, A quality setup, right, you sometimes are going to catch the manipulation phase, but it is what it is, guys. As long as you get SMT divergence below the opening price. So if we get SMT below the opening price of the 10 AM candle, we are looking for longs. And if we get like SMT above the opening price, then we are looking for shorts after change in a state of delivery, right? Very simple stuff. And there's another variation of this setup where we don't consider PD arrays at all. We don't consider PD arrays. So what we are looking for is after the market open, we are looking for the very first market structure shift. So you can see we open here, we go down, lower low, lower high, lower low, and then we get a market structure shift around this area, right? And let me just remove this. Right, we get a market structure shift. So now we can measure the manipulation phase, right, from the last low to the last high that was formed before a market structure shift. So now what you can do is anticipate a reversal or distribution phase, right? And to find that out, what we look for is a SMT divergence first around the -2 and -2.5. Right, and as soon as we get SMT divergence, right, we are looking for one more confirmation, and that is change in a state of delivery, right? So right here, if we get that you can take that as well. So in this variation, we are not looking at PD arrays, but we are basically using and identifying SMT divergence around -2 to catch the manipulation phase first, right? To identify the manipulation phase first, measure the manipulation phase first, and then we are going to catch the expansion phase. So that will look like something like this. Entry on the retest, stop goes above the SMT leg, so over here, above this high, and then we can pretty much use the fib from the last high to the last low and see if there's any liquidity, you know, that is overlapping with these numbers, right? And then you can target this low. So here are my fib settings. If you want to copy them, 0, 1, -2.5, -2, and -4. That is all I use. Oh my God, what the fuck just happened here? Anyways, so yeah, so let me just give you guys some examples and then I'll end the video. All right, guys, this is the very first example. So I took this trade today. This was the first trade of the year. And first thing first, what I did is I marked out the opening price of the 10 a.m. candle. So right here, we have the opening price, as you can see, right? This is the open. So also what I looked for is I went to the 15-minute time frame. And if I go here, you can see is that we had a fair value gap right here on the 15-minute time frame. Now, the next step is that I went back to the 1-minute time frame once again, and I looked for the very first market structure shift. So this is the open. We get a market structure shift here, but price didn't reach the -2. So the manipulation phase is not over yet. And then you can see price went up once again, swept out that high, and then we got a market structure shift, right? So I'm going to use my fib. I used my fib from the last high to the last low, right? And it was projecting -2 around this area. And also we had a 15-minute fair value gap. So price tapped the -2 over here, as you can see. And from here onwards, I was looking for SMT divergence. So initially we don't get SMT divergence, right, with this low, but then we push up, and with this low over here, you can see that NQ failed to sweep out that low. These are equal lows. This low didn't take out this low, right? However, on ES, what I saw is that price took out that exact low. It swept it, right? From here onwards, what I look for is change in the state of delivery. So these are the consecutive bearish candles that swept liquidity, right? So it swept this low and then this low over here. Now, you could be a bit aggressive here and wait for a closure above that singular candle that swept liquidity, or what I would do in most cases, I wait for all of the consecutive bearish candles to get swept, to get closed above, right? My apologies. So we closed above the body of these consecutive bearish candles right here. Now, what I did is I waited for a retracement. So I was seeing how price would react from this fair value gap. We did tap into this very extreme fair value gap over here on the 1 minute. And when I saw that price was pushing up like this, I took a long position and I put my stop somewhere around here. And then if you look here, we had a market structure shift around this area, right? So I used my fib from the last low to the last high, right? And it was projecting -2, -2.5 here. And that is where I took my profit, exactly at -2. Let's move on to the next example now. All right, guys, so here is example number 2. So this happened on January 5th. So you can see that we have the opening price over here, right? And if you look closely, we already had SMT divergence, right? So look at this low over here, right? This low was swept on ES. So this low over here, this exact low was swept on ES, but price couldn't take out that low, on NQ, right? So this is where the SMT happened. Now from here onwards, what we're looking for is change in a state of delivery, right? So there is not an consecutive bearish candles that swept some form of liquidity, so we don't have like a CIST level, right? If price closes above the bodies of these candles, right, and these consecutive candles haven't swept any liquidity, then that is not a valid CIST. It has to sweep some form of liquidity in order to be for it to be valid, because logically we are considering this as an auto block. An auto block is something that sweeps liquidity and then forms, right? So we sweep out this low over here, and these consecutive bearish candles would be an auto block, right? I'm not going to get into more details about what an auto block is. There's a lot of videos on my YouTube channel, but notice we have SMT divergence, right? And also we have a very fresh SMT divergence if you look very closely with this low over here. So let me just point it out like that. And if I go here, you can see even this is not a low, but it was just not, it was taken out on ES, right? So from here onwards, what we're looking for is a liquidity sweep of some form, right? So over here, we sweep out this minor low over here. So you can see we sweep this low, and now we have these consecutive bearish candles that swept liquidity. So first thing first, you can see that we have a high over here. So this move started here, right? We didn't close above the candle's high over here. Sorry, the body of this candle. So we wait. Then we get one more sweep to the downside, right? And then finally, what we do is we close above the body of this consecutive bearish candles. Now, notice closely here, guys. This is like extra sauce that I'm giving you right now. We have consecutive bearish candles, but notice here we have a high and then we have another high. So you want to use this as your starting point to identify your CIST level. So these are the consecutive bearish candles, not these two, because after these two bearish candles were formed, there was a high formed. So this would be your starting point. So price closed above these consecutive bearish candles that swept liquidity. We have SMT divergence. Now this is a setup. I believe there was no PD array. There was probably a 5-minute auto block over here. But notice when we get a mark close above this, we take our entry. And in this case, we are not mirroring the manipulation move, because again, I'm going to show you that this was actually a manipulation phase that you could have capitalized on. So we get a CISD. This would have been your entry at the retest. You would put your stop probably below this low over here, or maybe even below the bodies of these candles to make it a bit short, right? And for TP level, you can see that we have this very strong high up here. Again, you can use standard deviation. So for example, if you look closely here, let's just remove all of this. Don't miss out on this sauce, guys. Don't skip ahead, because I'm teaching you extra secret sauce. So for target projections, you can see that if we use it from this low to this high, the wick of this candle is so big, right? It is very unrealistic that price will actually go up towards this level. So what I like to do is probably like use it at the body of this candle instead of like using it at the wick. Sometimes I use it at the body, something like this, and that gives me accurate prediction, like accurate measurement. Okay. Again, guys, this is going to come with a lot of practice, but I promise you, if you keep things mechanical, things are going to work out phenomenally. I'm showing you this complicated example because not every trade is not going to be like, you know, like rainbows and sunshines, right? You have to use some logic. This is real trading. This is not like, you know, a video game. Okay. So enter the retest and bam, -2 hit. Let me give you guys one more example. All right, guys. So here is the last example. So this is what a 4-hour 10-year candle will look like, right? But this is how you would have capitalized it on, right? Capitalized on. So this is the opening price, right? And you can see we have this high. So this high was not taken out on NQ, but on ES, we took out that high, right? Now, how do we know what setup should we take? Should we take a setup? Should we take a plus setup, right? Now, the thing is, it really comes down to you. Now, personally, what I would do is I sometimes, if my bias is very strong, right? And if I see SMT, so if my bias is bearish, and even though, again, guys, this works without bias, right? So even like without bias, you can pick one setup. You can either use the A setup all the time, or you can use A plus setup. Now, A plus setups, they're not going to be there every single time. But over here, you can see as soon as we get SMT above the opening price, right? That is an indication that this was the manipulation move, right? And now we're going to distribute lower. So we got SMT, the consecutive bullish candles that swept liquidity. So we wait for price to close below this. So right here, if I zoom in, you can see we closed below the body of this candle right here. Now this would have been your entry. Stop would go above the high over here. And then we can use our standard deviation projections, probably from this high to this low over here, because that low was broken. So high, low, right? And it is giving us -2, -2.5 projection. And right here, bam, like that, 3.25. Pretty simple, guys. Again, it's going to require a little bit of practice, but I promise you, if you can master this strategy, guys, I've been using this and it has been working phenomenally for me and my members. It is a little complicated in the beginning, but if you practice, I promise you things are going to work out for you. So use the A setup or A plus, choose one, right? Now with A setup, you're going to have around 55, 60, 65% win rate, sometimes even 70. With A plus setups, you're going to get around 70, 65, and sometimes above. Okay. And that is going to be it. Happy New Year's. I'll see you guys in the next one.